Good morning. This is Dr. Roger Mayer. This is our first lecture of the Auditing BU5550. And in this lecture, we're going to provide a brief overview of Chapter 1, which is the role of the public accountant in the American economy. You notice that the focus of this course is the public accountant or the auditor. Before we understand what the auditor does, we need to understand where the auditor fits into society. The primary focus of this course is to examine attestation assignments. These primary attestation assignments that we will focus on includes the financial statement audit, as well as the audit of internal controls over financial reporting. It's important that we start off with a definition of what an attestation engagement is. Essentially, what we're looking at is an examination, review, or agreed upon procedure engagement that we are performing on a subject matter that is the responsibility of another party. Attestations are divided into several categories depending upon our level of assurance. The highest level of assurance relates to examinations or auditing. And in the audit, we provide reasonable assurance, and the output that we provide is that we express an opinion. Again, the focus of this course is to provide guidance related to the audit. So most of our discussion is going to be related to the examinations. In addition to the examination, there are lower level of attestation, including reviews and agreed upon procedures. As we continue with this course, we're going to provide additional guidance related to these areas of attestation. Let's take a deeper review of the attestation function. You notice that management is responsible for the subject matter. The auditor is gathering evidence and examining the subject matter based upon a suitable criteria. The output is going to be the attestation or the audit report. The audit report or the attestation report becomes an integral part of the subject matter. As an example, in the financial statement audit, the audit report of the auditor becomes a part of the financial statement. Thus, what we have is an audited financial statement. When we compare this to the audit of the financial statements, again, management is responsible for preparing the financial statements. The auditor is gathering evidence and examining the financial statements based upon a suitable criteria. The suitable criteria in the case of the financial statements audits is the generally accepted accounting principles. Based upon this assessment, the auditor will express an opinion. The opinion is based upon our examination. Our opinion of the financial statements is, and they will express the opinion, and then this opinion then becomes an integral part of the financial statements. So again, the financial statements are issued with the audit report attached, and these two are considered a single document. So let's take a look at what an auditor does in the course of an audit. The auditor gathers evidence to provide assurances where the auditor can provide what we call reasonable assurance that the financial statements follow generally accepted accounting principles. The auditor searches and verifies accounting records, looks at transactions, examines internal and external evidence. The threshold is sufficient evidence. We're not looking at absolute evidence in terms of the reasonable presentation of the financial statements, but we're looking at sufficient evidence. Based upon this evidence, the auditor then expresses an opinion. The opinion starts with, in our opinion, the financial statements present fairly in all material respects the financial position of the organization. This is assuming that the financial statements, in fact, do present fairly the financial position. As we go further in the course, as we look at specific audit reports, we will see what happens if the financial statements deviate from generally accepted accounting principles. While the primary focus of this course relates to the financial statement audit, there are other specific audits that you need to be aware of. They may be compliance audits, they may be internal audits where the auditor is examining operation controls within an organization. The other audit that we will spend some time on is the integrated audit of internal controls over financial reporting. We will provide more guidance on auditing standards in Chapter 2, but in this chapter I want to provide a brief overview of the two standard organizations that auditors need to follow. The first is the AICPA, where the AICPA issues statements on auditing standards. The statement of auditing standards are the standards that auditors use when they complete audits of non-public companies. The term that we use is non-issuers. In addition to statement of auditing standards, the AICPA issues rules related to statements on standards for accounting and review services. We'll actually cover this in a later chapter. The second organization that provides auditing standards is the PCAOB. The PCAOB is the Public Company Accounting Oversight Board, and this rule body provides guidance for audits of publicly traded companies, any SEC registrants. It also provides oversight and discipline to CPA and CPA firms, provides inspections of firms, conducts investigations, and sanctions registered firms. Based upon this information, what we're going to do is we're going to go into a deep review of these two organizations in Chapter 2. So I thank you very much for your time, and I look forward to talking to you in our next chapter.